We continue with that story and now of the Competition Tribunal having turned down appeals by 28 local and international banks not to be prosecuted for allegations of manipulating the local currency. The banks are said to have a case to answer after claims of a fraudulent scheme between 2007 and 2013. Local banks who are expected to face the music include FNB, Absa, Standard Bank, Investec and Nedbank. They allegedly conspired through information sharing on electronic and other platforms when trading in the dollar and the rand currency pair. The Competition Commission says the currency manipulation impacted on the exchange rate of the South African rand, among other things. We're now joined by Andre Cilliers, who is the director at TreasuryOne, to unpack the story a little bit further. Andre, thank you very much, as always, for your time. This is a big announcement by the competition authorities. This is the second time that the case is before these authorities. Please explain to us the significance of the ruling today by the Competition Tribunal and perhaps the brief history of this particular story.
Yes, good evening, and good evening to all the viewers as well. This has been a very, very long ongoing story of this collaboration to fix the exchange rate by banks. There's been long discussions about this, and as we know, the local banks have requested that they do not be included in this, made their presentations to the Competition Commission, and that was turned down now today, and decided that there is a case to be heard. So if we unpack it a little bit as to what they mean by collaboration, it simply means that certain of the banks, and the banks that's mentioned here, collaborated in discussions, and they mentioned that there was chats between people that would be between the dealers of the various banks that is being mentioned, where decisions was made. We must keep in mind that traders know their book. They know what kind of deals, what the size of deals is that could be going through, and that they have on their own books to go through during a course of a day, and then actually speak to other traders from other banks to decide when and when not to sell, to put in bids and offers that might be fictitious, or that's at least what the Competition Commission is referring to, and then in such a way manipulate the movement of the currency and determining where it can and where it cannot go, which would mean then that it's artificial and not following supply and demand, and not necessarily following the economic principles and economic data of the specific day. But that could lead also to pushing the rand in a certain direction, and that direction could trigger other stop losses and other orders from other clients, and it could mean that clients end up in positions where they don't necessarily want to be. So that's what is being investigated by the Competition Commission. Was there such things? Did it happen? And who was involved? And is there specific traders that was involved? If we then look further, now that the Competition Commission has decided that there is a case to answer, what could be the impact? Is it an impact on the banks? Is it an impact on the exchange rate? Is it an impact on the economy? So, start at the back end and the economy. No, I don't think it will have a dramatic point or influence on anything that happens in the economy. It's historic. It's not happening at the moment, and it's not moving the currency in a specific direction at the moment. So very little impact on any economic data. Would it have an impact on the exchange rate at this point in time? No, I also do not think that that would happen. As a matter of fact, I think it's actually very positive in the sense that it would make people totally alert that they shouldn't even consider doing these things, as it can be found out and it can lead to investigations. Would it then have an impact on the banking sector? Yes, it can. It would be a very, very long, dragged-out situation, but fines can be imposed on the banks. These could be very, very hefty fines. We have seen in the United Kingdom, we have seen in other areas in the world where investigations was led by commissions regarding, for instance, the fixture of interest rates, very specifically in the UK, that led to fines imposed on banks of billions of dollars. And that, of course, could mean that the profit figures of a bank, when they have to pay such a fine, would dramatically be impacted. And that impact would hit the bottom line. And if it hits the bottom line, then your shareholders would feel that in their pockets in terms of dividends, and they would feel that in their pockets in terms of a share price that could be negatively impacted because of that. But it would also lead to a negative perception left with clients, clients of the bank who deals with them in the foreign exchange market. And that would mean simply that because the client gets nervous about what the bank's actually doing, and are they actually working in their best interest, that they might be in search of another bank that they feel would be more prudent to deal with. So an impact not only on profitability because of fines, but an impact also in terms of the perception of clients of how well the bank is actually taking care of their foreign exchange positions. And we should not forget that foreign exchange, if you just take the nuts and bolts in the economy of imports and exports, is billions of rands of business for banks. And then on top of that comes the financial transactions of money moving in and out of the country in terms of finance transactions that's got nothing to do with imports and exports. Also billions of rands. That would include investment into companies and mergers and acquisitions and all these things. So if a bank gets negatively influenced because it's nervous, it would have a dramatic impact.
Andre, thanks for that clarification on what is likely to happen to the banks, and there's no, in terms of impact on the economy that is expected from this. But going back to the years 2007 to 2013, the years in question, during this time, when it comes to what the Competition Tribunal says, there clearly was an impact because they are saying that the currency manipulation did impact on the exchange rate of the rand, in turn affecting parts of the South African economy, including imports and exports, foreign direct investments, public and private debt, a company balance sheet, the list goes on. So the currency manipulation is of a huge significance when you look back now into those years, 2007 to 2013, in the ramifications of the rand or the currency manipulation itself.
Indeed, but it is my opinion that if you look at currency manipulation, if it happens and when it happens, that it's got a very short-term impact on what the currency does. Overall, over a number of years and over a number of months, for that matter, the actual flow of transactions, the actual net demand and supply of currency would actually be the determinant of where the exchange rate eventually goes, weakening or strengthening. It's not possible to, on a continuous basis, manipulate the currency in a specific direction, because ultimately the net flows will be the one that's determined of where the exchange rate eventually goes. So there could be short-term periods where it gets pushed in a certain direction, and that could have an impact on the cost of specific imports or exports, or the cost of a specific merger, acquisition, or anything like that. But overall, over a long-term period, I do not think it's possible to manipulate the currency to move only in one specific direction.
Andre, there are issues around jurisdiction and whether the competition authorities in South Africa can actually hold international banks with no operations in South Africa accountable or even fine them. And this is what some of the banks have said, to say that you don't have jurisdiction, but we are over that now. It seemed for some time that was the only answer that the banks had, to say that you don't have jurisdiction over this, because there were multiple jurisdictions in Australia, the US, London, and other countries, including South Africa, that were allegedly involved in this manipulation. What are the banks saying, besides saying the issues of jurisdiction? Because it's seemingly they are saying that we did nothing wrong.
Yes, our local banks are saying that they have nothing wrong, and that's over whom the local competition commission has got jurisdiction. It is my opinion that if the competition commission might not have jurisdiction over some of the international banks without operations in South Africa. However, were they to be a finding by the competition commission that is valid, that is rightfully true, those banks in their own respective countries have also got regulators looking at what they do and how they do it, and whether they conform to certain regulations. And internationally, there is a standard code of practice of fairness and the code of conduct. So I'm quite sure of it, that even if we don't have jurisdiction over that, if it was to be found that it is indeed so that those banks did contribute to manipulation of the currency, that their own regulators would also then investigate and certainly look into the matter.
Andre Cilliers is director at TreasuryOne. Thank you very much for your time, sir, tonight, talking about the decision of the Competition Tribunal to say there is a case to answer for the 28 banks on allegations of manipulation of the rand.